Thank you for waiting. Okay, before we start, can I just draw your attention to the disclaimer that I know you can now see on your screen. As you know, trading can be an extremely risky business, so please don't ever think of using money that you cannot afford to lose. We have been away for a little while. We've been doing all sorts of other things, but it's great to be back this morning, and we couldn't have come back at a better time in the sense of what the market has been doing, not doing. I can't really remember. You know, I know I've said this before. I can't remember a time like this. Well, we've not had a pandemic, the threat of a pandemic before, and markets kind of ignoring it, and huge moves in forex, in the indices. You know, so much written about what's going on, what is not going on. Is this the black swan that everybody has been perhaps waiting for in terms of the equities and indices? We shall see. But forex sits in the middle, and we can see all that happening, all the sentiment that is going on in the rest of the markets, because the forex market is that. It is one of its functions is one of sentiment, and we're going to be looking at that in this webinar as we go along. David is over to my left. He's on a different machine today, so he's just sorting out some charts. And in case those of you who've coming along for the first time, the way David and I look at the charts and interpret what is going on is through what we call the prism of volume price analysis. And I know some of you here today have already bought the books that are up on Amazon, which I have to say, I think we counted up the number of 5-star reviews, and it was absolutely astonishing that there are now 500 5-star reviews. That is across all the books that are there on volume price analysis, and it really is truly humbling.
Good morning, good afternoon, good evening, everyone. And just checking with Anna that we're having a few technical problems. I just want to make sure you can hear me and I can hear her, and we're all good to go. Just going to pass back to her now. Apologies about that. Awful sound, sorry.
Right, the book's on Amazon, and as I said, volume price analysis explained in great detail. I also use it obviously myself in our trading and investing, as does David, and in all the market analysis that is out there. And what we also have done is supporting the methodologies. We've developed a whole set of tools, indicators, apps for ourselves, which are now available. And for forex, we have some very forex specific ones, which we'll be going through and looking at through the session. So I'm going to take that down because that's all I want to say on that. And let's have a look at some charts. Now, where I was going to start, what the topic I was going to cover today was obviously sentiment and how that is reflected in the currency and currency pairs that are in the forex market, in particular looking at the Australian dollar, the New Zealand dollar, but more particular the Australian dollar, because anything that happens with China, good, bad or indifferent, is always going to be reflected in the Aussie. And in the Aussie yen is seen as a proxy for, if you like, the market sentiment generally. Now, we also have some really important pieces of fundamental news this morning. At 8:15, we have the flash PMIs for France, Germany and EU, and we've got the UK ones coming up at 9:30. And of course, we've got the London Open in 5 minutes, which is always an event in its own right, in the sense that it's a great time for the insiders, the banks that control and make this market, to manipulate this market, because this market is about level of what we say in our education program. It's about levels and flow. Now, what do we actually mean by levels and flow? And really, the best way I can describe it for you is, let me just pull this up. Some of you may have been following this yourselves, but the let me see, there's been a case with HSBC of market manipulation, in the sense that some traders, and this goes back a long time, basically the banks, what are called front run the price levels on the chart, in the sense that they get we sometimes forget this market is all about facilitating trade, and you know, huge companies have to buy and sell great blocks of currency, and this was to do with Cairn Energy. If you just type in Cairn Energy, HSBC, it is all explained. It's in the FT and it's in lots of other media as well. And essentially, what happens is the bank's client comes in. They say they've got a deal. They're going to need 45 million euros worth of euros that they've got to exchange, and they fix a price. They fix a price level. They say, okay, we'll do this deal for you, we'll exchange this, and this is what we will quote you. It's no different to when you want to go on holiday and you walk into a well, I was going to say Thomas Cook doesn't exist anymore, but you're at the airport and you have one of these little booths where you want to exchange your home currency for the currency of the country that you're going on holiday to, and it's no different, except the scale is absolutely massive. Now, the traders, the bank traders, know that these orders are coming down the line. These guys were trading for their own account and for the bank's account. The bank made 8 million on the deal, on top of the commission that they would have charged the Cairn Energy. And the guys who have been accused of front running, in the sense of driving the price to a particular level, they also made money on the side, as it were. That's what you are up against in this market. So levels, if you like, the levels that you see on the chart are really, really important. Now, the good news in terms of forex is that anything with a 0 and a 5 in it is considered a very, very important level, because that's how you know, when someone's quoting you an exchange rate, they tend to use a round number, and 5 and 0 is one of them, and that creates the price levels, price-based levels that we see on the charts. And the flow is the driving of the flows of the currency in the currency pairs back and forth towards those levels. Now, and against all that, the price is then also moving. It's reflecting what the sentiment is out there in the broader market. So as you can see, if you've been sold on this idea that this market is just, you know, you look at a chart and you say, is it going up or is it going down? Probably, you know, ultimately, I suppose that's what it boils down to. But behind that decision, behind that binary decision, is this web of complexity. It's not complicated, it's just complex. And when you look at your chart, if you're not aware of, you know, the narrative that is going on behind it, then you are really going to struggle. And as I said, it's what we explain in great detail in our forex program, the details of which I will give you later. So what we've created in terms of the indicators is that we have created a means of being able, if you like, to look inside what the market is actually doing in terms of what are the key levels, where is the flow at the moment through the proprietary indicators that I showed you earlier. And what we have is what we have under here. We have volume, which actually tells us whether the price action that we're seeing on the chart is authentic or not. And the best example I can give you of this is if you look at the daily chart of the Aussie yen, and I've actually written about this on my on my blog, and not my blog, on my Learn Forex Trading Facebook page, because this is a perfect example of what I mean by looking at what's happening in terms of the price action, and also looking at the volume that is going into that candle. And it was just such a glaring anomaly. This was Friday. This was Wednesday. The markets were all in, you know, risk-off mood. Coronavirus was over. There was a vaccine coming down the line. Chinese were back at work. You know, this scare that the market has had is all over. So the market's absolutely roared up, and the Aussie yen went with it as well. And we can see this very big up candle, but look at the volume underneath it. That is anomalous. That is not you know, you look at that, you think, that's it's a bit suspicious. And at the time, the thing with volume price analysis, it will throw up these signals, these potential signals, this view of the market, and it can be totally counterintuitive to what you may be hearing, what you may be reading in the general market. And you look at that, you think, do you know what? How can that be? And you have to learn to be able to hold that, if you like, that contrary view in your head. Just park it in your head, be put some detachment from what you're listening and what you're reading, and think, do you know what, that is going to come back at some point, because you can't go off one signal, but it's like a warning flag. And you think, okay, in fact, the next day, we can see here, the market did actually fall, but then it had an attempt to rise, and a ton of volume went underneath it. Look at that volume under there. It didn't go any further than, it even didn't break the high of the day. So that's another kind of warning. You think, well, hold on a second, that pushed it up that far, more volume went up there, didn't go any further. Something is going on, and the something that's going on is actually today. And this is what we've seen. We've seen the if you like, the rollover, the effect of what went on in the volume, the price action and volume on this candle is being seen today. And this is where the levels, if you like, the levels and flow come into it as well. Now I'm going to bring up the CSI, the first of our indicators here. I have the time frames I use. I like to look at the hourly chart, because it's just there are 3 separate sessions for Forex, and it's just a good way to tell me what is happening. And we can see here the yen has been rising strongly, a yen proxy for risk. Markets are not happy, yen will be bought, and you can see here the Aussie and the New Zealand really, really low, very, very overbought. Now, at some point, they are actually going to turn up. If this market sentiment continues, these can stay oversold and, you know, at the other end, overbought for a lot longer than you and I can stay solvent. Now, interestingly, if we look at the euro, which is sort of kind of trying to turn up, and the pound is, but it's not moving with any great momentum, and that's because of the news for the euro at 8.15, and the pound is just sort of dithering at the moment. One of my favorite pairs is actually the pound Aussie, but that's really not doing very much at the moment. It's stuck in a congestion. Now, to get back to my charts here, let me just move that back to my 3-minute that I have here. So I know, and in terms of levels, because what we've also done, let me put that to 3 minutes here. What we've also done is we've created levels, these important levels on the chart through our indicators, based not only on price, which is I've got NinjaTrader up at the moment, which is the blue and the red here. These are price based, and the thicker the line, the more times that level has been tested, as we can see here, and the thicker it becomes, then the stronger that becomes. So you could use these levels in the terms of, well, if you're in a trade, the chances are if you hit this level, it ain't going to go much further unless you have a huge injection of volume. If you're not in a trade, you could possibly look at it from the perspective of maybe a reversal. And then we have the volume point of control, because this is looking at volume and price, but over time. And what the volume point of control indicator does is this yellow hatched line is when the price action was in balance. There was no divergence one way or another. So it's a congestion phase. Then you have the breakaway, and what we need is a clean breakaway with lots of volume underneath it as well. But what the indicator also does, it also has its own levels based on volume, and these are these thicker lines that we can see here, not the individual lines, these shaded lines. And the importance of these is when you use them in multiple time frames, is you could be in a trade, as this trade is here on the break from the just below this, it's about 73.87 here. Suddenly we had an attempt to rise here and a little reversal, and what we can do is, by looking at a slower time frame, we can see why we had a temporary pause. In fact, it broke through that one, but then it paused here, and now it's on its way down, and it's pausing again at 73.55. And what I also use this with is in conjunction with a non-time based chart, which I've got over on my other screen. And this is a Renko. This is when we use time and non-time based. And again, what the Renko does, this is an indicator that we've developed specifically for Ninja. I'm using Ninja 8 this time. I've given up with Ninja 7. I've moved to Ninja 8. And this is running at 1.8 pips. So every time 1.8 pips goes through the market, one of these little bricks is printed. And what it also does is if you've missed a trade and it's gone into this kind of congestion, you can also either, two ways of using it, you can either use it to re-enter, also looking at the CSI, or you can add to a position. Now, at the moment, it is still very, very bearish. We've had an attempt to rise there. But the beauty of this indicator, it takes away the noise that you can have in a time chart. As we can see here, if we go back to the 3-minute, when we look at the trend that's been developing on the Aussie yen, was it a nice? Well, it's not really a very smooth trend. We had some, we had some quite sort of, not a steep pullback or correction, but a decent amount. This is a very interesting candle with volume underneath it, but again, didn't go anywhere. This is a very interesting candle, a ton of volume coming in. But you have to bear in mind that this is the London Open, and the London Open, you will always get a volume surge. So these candles then, if you like, they get a little bit squashed because this volume you have to read in context and relative to the session. We are actually working on another concept for volume, and that is based on it's a concept called relative volume, which to help us identify even more accurately whether what we're seeing here is high, medium or low, but that's something for the future. And in fact, it's something I'd like to point out now. If you've invested in these indicators, as you know, when we upgrade them, when we develop them, when we change them, all those are free. You never pay us any more money. We're always looking to improve indicators, that improve the functionality. We get suggestions from our users. They say, well, I've been using it in this way. Do you think you'll be able, is it an idea that maybe you can incorporate? And we'll always take on board lots of different ideas, and one of them is for the matrix, which we're very excited about. So if you do invest in the indicators, or you have invested in the indicators, as I said, all these are free. Now to go, all the upgrades are free and they are yours for life. So looking at what's happening on the Aussie yen, despite that we've had this big surge come in, let's have a look at what we are really struggling this morning. I don't know what's the matter with it's not the internet actually. We've actually moved to very fast BT broadband. I won't have a word said against British Telecom at the moment, but oh dear. Yes, I will. I'm just going to try and move this. Hold on. I'm just going to try one more thing and then I'll pop over to David. My fault, being stupid. There we are. Unfortunately, I can't have them on my one workspace because my monitor's not big enough on this system. But this is what the Renko will do. It simply absorbs all these little pullbacks. Yes, we've had a little pivot here, but the trend dots are still solidly red. We had a couple of little blue ones there. The way the trend dots work, they're either blue, red, or they're grey, which basically tells us we are in congestion. And the way we use these two indicators are both for entries, keeping us in, and also for exits. And what I like to see is basically when we have an agreement between either sort of 3 or 4 trend dots, and the monitor is then absolutely bright red, and we can see it'll hold you through that went blue, it carried on down, and it's still not showing any signs of wanting to roll over. And again, we just look at the CSI. What's it here? Where are we? Hey, you can see the overextension on the, what's this one? This is my 5-minute CSI. I mean, the yen is it's on a rampage higher. This is because market sentiment, and we can see what the market sentiment is. There we are. Let's have a look, quick look over here. there we are. We've got the NASDAQ down to 81. The S&P is down 23. Fear stalks the markets once again. Right, let me just pass over to David. You've heard enough of me. I'm going to see what's going to happen with the euro at 8.15, and then we'll take it from there. Is that okay? Are you ready?
Yeah.
Okay. Let's have a look. I'm just going to tell, and if you've got any questions, by the way, just pop them into the chat box. I'm happy to answer them either on air or online.
No, not stressed out. And I said, am I calm? Yeah, absolutely calm as always. There we go. Hopefully you can hear me okay, and no horrible reverb. Sorry about that. I was having issues with the connector on my Shaw system, and I unplugged it inadvertently because I couldn't hear Anna, so apologies about that.
Have you answered any of the questions?
I haven't, no.
Do you want me to do that?
Anna's just going to answer some of the questions. Sorry, just to pick up on, I've been following the CAD yen, which I literally picked up as we were getting started, early doors. And it's just a really nice trend that's continuing on lower. I've got the 1 minute, 3 minute, 5 minute strung across the top. Forgive me, I'm on an old machine here, so this is not my usual workspace. It's a very old workspace. 10 minute, 15 minute, and daily down at the bottom. Multiple timeframes, as always, just has to be the basic starting point, whatever you're trading, and you can also apply it to Renko as well. On the other machine, I've got multiple Renkos set up, which is another great way to use Renko too, not just in isolation or not just in tandem with time, but also against itself, if you like. So you can have a 1 minute, 2 minute, 3 minute Renko set up on Ninja, and it gives you that perspective as well. Just to really pick up on what Anna was saying, just keep an eye on this, really nice. The trend monitor you can see is bright red across the piece, so it's red right the way through, down onto the 15 minute here, and hasn't changed on the daily yet. But just to highlight the daily, just flick that up full size, pull that out a bit. And really this just highlights and reinforces across the yen complex, this is what we saw the other day, this massive surge, but look at the volume. And then the following day, you get maybe a third of that price action, and you get maybe another 20, 30, 40% of volume. So that is telling you, not only is it reinforcing the fact that this is, we could see it instantly. As soon as we saw the session close off, you could see the volume under here. It was just completely out of whack. There's nothing else on this chart in terms of the price relationship that comes anywhere close. I mean, you look at the volume here. I don't know, go over here somewhere, for example. This was half the price action on the day, but a higher volume than we had over here. So just from a straight comparative point of view, or even here, same sort of thing. And when you compare those two, this one, for example, with this volume, and maybe this one with this volume, they look in balance, they look in agreement. It's something you look for the whole time. You are constantly looking for benchmarks, if you will, of volume. And indeed, if you look at the highest volume of this particular chart, this was the highest volume so far. Tons of volume coming in there, lots of buying coming in there. Again, you know, pretty straightforward. It's strong, very, very strong buying, and off up we go. You know, it's VPA 101, if you like. This is slightly more subtle, I suppose, but when you look at it, you know, it's just so far out of whack, it just doesn't make any sense at all. Then you get the compression, lots of selling going on in here because you've got pretty narrow price spread, but a ton of volume coming in, and now we're seeing the downtrend developing. In terms of using on a multiple time frame, it just gives you all that different perspective. It helps to keep you in, whether you're trading on a scalping perspective or whether you're trading longer term, it doesn't matter. The perspective you get is very different. We've got lots of volatility. My worry at the moment is certainly down on the 10 minute. If we're holding this for a longer term perspective, anything more than sort of a few minutes. What we're looking at here, we've got a volatility trigger. Lots of volume, no great surprise, it's the London Open. What's interesting though is when the initial volume came in here, it wasn't that great. Now we've got this big surge in volume. So we've got heavy selling going on in here, but we've also got a volatility trigger. So the question you've got to ask yourself now is, am I going to look for the congestion phase, which is likely to follow on from that, or am I going to sit tight? What am I going to do? As I said many, many times before, there's no guarantee that this will congest or even reverse, but there's always that prospect. Now, the reason that I picked this up on the initial was on the currency strength indicator, because if I hop over onto that, what really caught my eye This is on 15-minute. I've got the other time frames here as well. That's on 5. This is on 10. And this is on 15. And what caught my eye across this complex was the heavy selling, particularly on this one, was the heavy selling of the Canadian dollar. Anna was on the Aussie yen. Yes, of course, there is a trend developing on that. But when you look at it in terms of the actual strength in the move, the CAD is going to deliver more. And the reason it's going to deliver more is purely because of the inclination of that line, the steepness of the line. In other words, the selling of the Canadian dollar is much stronger than the selling of the Aussie dollar, because the Aussie dollar is down in the oversold region anyway. The New Zealand yen won't be doing much because the New Zealand's flatlining. Having said that, without even looking at a chart, there will be some trend there purely because this whole complex at the moment is being driven by this yen buying, which is extremely strong. But if you were looking at the opportunities, and when I started looking at it, the CAD was up here somewhere. These two were still down here. If you're looking at opportunity, then you've got to assess what is going to deliver, which is the best potential across the yen complex. If it's being driven by sentiment, which clearly it is this morning, then what is the best pair to focus on? And it wouldn't have been these two because they were already well down in their travel, and therefore you're looking very much at the CAD. And that's purely the reason I pulled the CAD up, just straight off the bat from the currency strength indicator. It's still developing nicely, very strong buying of the Japanese yen. Here you can see very strong selling of the Canadian dollar down here. We're deep into oversold now. If we move up onto 10, same picture there. Not quite into oversold. This is very into overbought, the Japanese yen, and up onto the 15-minute, which you've been looking at. So just to highlight the fact, that's really what I was looking at. And then, of course, you're isolating out, perhaps we isolate out the yen here on the currency matrix. We've got a full house, to use a card analogy. That's it. That's what you're looking for the whole time. What that sole image tells you is that the yen is universally being bought. Excuse me for a moment, I've got a frog in my throat. Hold on. Sorry about that. The yen is being universally bought across the complex. In other words, there are no pairs where the yen is being sold. It's being bought universally. That's on 5-minute. Up onto the 10-minute. We'll isolate it out again. There we go. Tells you exactly the same thing. Go up onto 15. Wait for that to load for a second. What happens on Ninja when you're working on the tabs, they, in order to conserve and maximize the potential processing, they do actually close off when you've got the window shut down. Just close up. There we go. So it's universal. That's what the matrix is telling you. Everybody, the market per se, en masse, is buying yen. Doesn't matter why they're buying yen. You don't need to know why they're buying yen. They are buying yen. End of. So whichever pair you trade, you're going to be trading in the right direction. And then it's a question of teasing apart the complex to find the best opportunity. And that's what I wanted to highlight. You could trade any of these pairs, or you could have done in the last hour or so, and this is likely to continue. But of those pairs, the CAD yen was the one that was really going to deliver big time. Now we could do the same exercise on the currency array as well. I'll just go back onto the charts again. There we go. Right. Now what we're seeing now is quite interesting. And this is what I highlight all the time. When you get the volatility trigger, there's never a guarantee that this is what is going to happen. But it's always a possibility. And as I've said many times before, if I'm in a position and maybe I've got in here early and I've got some decent profit in the bank and I get something like this on a slower time frame in my time window, if you will, what I'm always looking for is to close out, take what I've got off the table, because if this continues lower, I'll jump back in again. No big deal. What have I lost? Maybe a few points, a few pips. So what? Makes no difference. You jump back in and then cost of trading is next to nothing. You jump back in again. If this starts reversing against me, then I'm happy. I've closed out. I sit tight, wait for either the congestion to pass and the continuation of the trend, or I'm looking for a full-blown reversal. And it's just so powerful. You can see the volume coming in here. It's pretty dramatic. We had this move to the downside, so we've got a nice big wick developing. We've got a ton of volume coming in, so there's no question there is buying coming into this market, big time. This is the London Open, so bear in mind, as Anna said, we can compare here up to this point. This is 8 o'clock London time. This is, where are we, 7 o'clock here. This is Europe. So this was Europe getting underway. This is Asia from around this sort of time here, right back over here. So this is all Asia. This is Europe, so we can compare in here, Europe, Europe. Now we're starting to see this this big volume of buying coming in. We've got a volatility triggered. So again, we've got volatility now because it triggers in real time. You don't have to wait for the candle to close. So what are we seeing on, let's go up onto some of the slower time. You're seeing that buying reflected on some of these faster charts. And if you're trading this and you're looking at the candles, okay, this candle was fine, a little bit of a wick there, then you start to see the buying coming in. You've got more volume coming into the market. Got a nice deep wick there. Further, a little bit of buying here. Now we're starting to see, you know, upspread candle, really strong volume under that candle, maybe a little bit too high, I have to be honest, if you look at the at what's going on, but we'll see what happens on the next one. But we're starting to see definitely that that reversal take place. And obviously on the CSI, what you're looking at there is a perspective of overbought and oversold. And if you want to get into a reversal trades, as I like to get into, because it means I get in early, then you'd be looking at the extremes. I always look at the extremes because that's always my starting point. Let's just head on to the currency indices, and then we're going to have a look at the US indices, see what they're doing. These are the currency industries. Top left is the yen, top right is the dollar, bottom left is the euro, and bottom right is the pound. These are all on 5 minutes, so pretty quick, just to keep pace with what we're doing in terms of time frames. You can see this is the yen. If you like, we're seeing the inverse. We've seen a nice shooting star candle on here, so this is telling us we don't have volume on this because this is an index chart, so it's an indicator. We can't put volume on here. But nevertheless, just purely from the price-based action, and if you saw that on a price chart, it's giving you a heads up that the market is at the very least going to congest or certainly reverse lower. It's not looking terribly strong, particularly if it's repeated. We've just got one here. So that's what we're seeing at the moment. We're starting to see that yen selling coming into the market. We've got some pretty strong dollar selling coming into the market, so it might be worth looking at some of the majors, see what's going on there. Pound's kind of flip-flopping around, doesn't really know where it's going. And the euro also similar, sort of quite choppy price action, no great direction on the euro at the moment. Just head on to the onto Globex to see what's going on there. Forgive me, I'm trying to find my way around here. Where are we? Indices. Yep, there we are. This is the one I wanted. Yep, that's the one. There we go. These are basically the US indices. Top line is on 5 minutes, so that's a fast time frame. Down at the bottom here, these are on the daily. We've got the Dow here. We've got the Nasdaq 100 in the middle, and over on the right-hand side, S&P 500. So that's giving you a heads up in terms of sentiment. What is the sentiment? It's pretty bearish at the moment, and that's being reflected there. And if you go onto the bond market, you will see that reflected in bonds as well. You'll see the bond yields and bond prices will reflect the current sentiment. The point about what is driving the sentiment this morning is, if it's a question that it is very much to do with the Chinese virus, I'm not supposed to call it that, but there we go. There is always the prospect that this is going to have the souffle effect, what I call the souffle effect, what Anna calls the souffle effect. In other words, a strong reaction in one direction, which is promptly then followed by a reversal as the markets go, oh, well, actually, that was, it wasn't quite as bad as we thought. Life goes on, etc., etc. It happens continuously. Why it happens is purely because the market makers, the insiders, the big operators use every piece of news, whether it's global, whether it's local, whether it's someone saying something, it doesn't really matter. They will use that all the time to move the markets around, because let's face it, if you were an insider or market maker, you'd do exactly the same thing because it's so simple. And all of that is reflected in volume, because what you'll see in the volume profile is whether and if the move is genuine, and second, when it's reversing, you will see it. It's as simple as that. Volume reveals the truth behind the price action. End of story. Let's just go back onto the multiple time charts again. There we go. That reversal is developing quite nicely now. This is on the 1 minute. I like to use the 15-second a lot as well, but the principles are exactly the same. Doesn't matter what you use. I've got the volume point of control here. That was the volume point of control down at 84.1. Yep.
Someone's just come in as a very new via Sam.
Yep.
What do you mean you always look at the extremes?
Oh, okay. I'll answer that question. Sorry, Anna's just interrupted. In terms of extremes, I'll go back to that. Apologies. I know a lot of you come along regularly, and forgive me, I have my chat box shut down when I'm in full flow, but I will answer the question in a moment. And if I don't, please remind me. I'm sure Anna will.
And if they don't understand, we just take it for granted.
Yeah, apologies. What we've got set up here, we've got the volume point of control. So this is showing us our histogram. It's giving us a heads up in terms of using volume from a price, from a support and resistance perspective, because as markets approach these low volume nodes or high volume nodes, then it gives us another insight into whether the price action is going to struggle at those levels. These levels here are on the accumulation distribution indicator. They are basically price-based. The thicker the line, the more times that level has been tested or retested and held. So in other words, very simply, that's why we developed it this way, the thicker the line, the stronger that area of support or resistance. But the same principle of support and resistance can be applied to this volume histogram up and down here. And as markets approach, for example, if the market comes down here and approaches this little low volume node here that we've got here, you would expect it to move through there fairly quickly, because there's nothing from a volume perspective, or very lightweight volume, to hinder progress lower. And equally, once we get back to the volume point of control, which is always the heaviest area of volume concentration, then you would expect the market to congest at that point, because it's reaching an area where you've got a lot of volume. Just to go back and answer that question before I forget, let's go back onto the currency strength indicators. There we go. There we are. That's the currency matrix. Let's go back to CSI. Was the question about extremes? Yeah. Okay. This is on 5 minute, but the principle applies. Let's pull that over a little bit. There we go. This applies to any time frame for the currency strength indicator. What are you constantly looking for? What I'm looking for, the first thing I look for is I'm looking for extremes. I'm looking for these currencies which are either overbought up here, of which the Japanese yen was one, or currencies which are oversold. And at the moment in oversold, we've got the Aussie, we've got the Canadian down here, which is now starting to tick up. We had the New Zealand dollar, which was pretty crushed and is now starting to move up quite firmly as well. So to answer the question, when I say extremes, what I'm looking for, I'm looking at these extremes of currency overbought or oversold. And the reason I'm doing that is because I want to get into a trend early. The downside of that is that you have to set your stop loss wider, because you don't know when this currency is going to reverse and move higher. But at some point it will, because no currency will ever stay overbought or oversold forever. They just doesn't happen that way. They have to keep moving the whole time. So what you're looking for is the extremes of where you can get into a trend early. In other words, you've got to wait, set your stop loss wider, but when that trend gets underway, you are in the pound seats, because you've paid a higher price. It's like, well, I suppose if you buy a first class ticket, you've bought a higher, you've paid more for your ticket on the train. You've got nobody in the carriage. It's nice and comfortable. You're waiting on the train to leave the station, and everything's tickety-boo, and off the train goes. Once the train starts to leave the station, other traders will be trying to jump on board, obviously, and as it picks up momentum, the more that is the case. You've started at the first stop, if you like, so your gain, your potential gain, is always going to be a maximum, but you've paid a higher price for that because you've had to set a wider stop loss. People who jump on the trend, which is now underway and are starting to develop on the yen, starting to see yen selling coming in, maybe people are jumping in now, they won't have to set such a wide stop loss because that trend is already underway. And there is no right or wrong way to trade. All I'm saying is that what I look for is extremes. I know a lot of our customers look for extremes as well. But once that's underway and a trend starts to develop, then you're looking at the opportunity of jumping in. If we've got the yen falling here, we've got the euro rising here. So if you're looking at a euro yen chart right now, what you'll be seeing is a nice move on the euro yen, but that move is already underway. I'd be looking at something like the CAD yen for a buy now. If it's down here, this is moving strongly. Let's wait for this one to pick up strength and move higher. New Zealand yen is moving higher. And as you tick through the time frames, obviously what you're going to see is a slightly different picture all the time. Here we're seeing the New Zealand dollars just starting to move up. No move yet on Aussie, and the CAD is still falling at the moment. It's certainly in terms of 10-minute, move up onto the 15. These are still flatlining down here. The yen is up here, hasn't rolled over yet. The CAD, the Canadian dollar is still falling. And this is what it comes back to all the time. It's excuse the pun, but it is identifying what you're trying to do at any particular moment. Are you scalping this market? Are you on a 1, 2, 3 minute time frame window, if you like? Are you on a 3, 5, 15 minute? Are you on 15, 30, 1 hour? What is it you're trying to do? Because whatever you're trying to do, you will see the opposite happening in a faster or slower time frame. It's as simple as that, which is why it's so important. You have to define what it is you're trying to do within the scope of the time window that you're operating in. Because if you move outside that, then you'll start to try and apply trader bias to confirm what it is you thought was going on by going to a slower time frame. And once you start down that road, it's very easy to fall into the trap of, oh, well, I opened this position in one direction, but actually I can see slower down here that it's going in another direction. So I'll just hedge my bets and I'll just leave it because it's not doing very well at the moment. And you know, we all do it. We've all done it. It's so easy to do. This is a tough business. Okay, what are we seeing at the moment? Well, we're seeing that reversal develop. Just pull up, that's where we were before. Lots of buying coming in here. Bit of a weak response on this one, you know, trying to go higher. Good volume under there. It's trying to rally. It's not looking terribly strong, but nevertheless, we've got this reversal underway. And certainly in terms of the faster time frames, we have the transition, the trend monitor transitioned out of the very bearish into the this is the classic reversal color change, if you will, from bright red, dark blue into bright blue the other side. We've gone into dark blue because we're transitioning around the volume point of control. This is telling us to expect congestion. If we look at what's ahead of us now on the 1 minute, what have we got? We've actually got a cluster of 2 levels here. These are going to come into play literally in the next few seconds. We've got a trigger of volatility coming in, so, you know, and a ton and a half of volume coming under that one. We're now looking at this from a resistance perspective. Is this market going to be capped off at this point? Because we've got strong resistance here. We've got another level up here. But if we can get through that level, we've got a nice low volume node up here, 10 pips above. So if the market can break through there, you can see the trend monitor starting to transition back to bright blue again. It had that pause point. And what the trend monitor does is been designed to try to help to keep you in a position, because that is the hardest thing to do in any trading, bar none. Once you've got some profit in the bank, you want to keep that as much as possible. And as soon as the market starts to reverse against you, your emotional response is, I take it off the table. You know, Anna's just come over. She wants to jump in for a moment. You know, once you've got $100 or $200 in the bank, then you start to see it unwind a little bit. You see it start to go to 190, 185, 180, 175, 170. You think, oh, I've got to close out. I close out. Almost as soon as you do that, the markets then start pauses and then probably continues in the same direction, and you're left regretting it. It's the hardest thing to do in trading, and that's why we developed Trend Monitor, to try to help to identify whether a trend is a true reversal in trend, or whether it's just a pause and congestion phase with these congestion colors. And the other aspect to it clearly is not only volume methodology, but also, of course, using multiple time frames, because multiple time frames, you've got a fast chart up here, it'll give you the heads up. And if you're trading over here, you know, this will give you perspective over here. This will give you perspective over here, and so on and so forth. And, you know, as I said at the start, when I came over onto the CAD and said, we've got this, you know, big volatility candle coming in, what would I have done? I would have closed out, taken my profit out. That's it. I don't want to sit through congestion. I certainly don't want to sit through a reversal, which we're now seeing, you know, a full-blown reversal taking effect here. So we're seeing a reversal from primary to primary, in other words. This little trend lower, primary trend lower. Now we're starting to see a development into a primary trend higher. I'm going to pass back to Anna because I've rattled on too long.
No, okay.
Do you want me to change screens?
Yeah.
Yep. Okay, we're just going to change screens back to Anna. Hold on.
Oh, right. Just very quickly, I just wanted to just quickly on the Aussie yen. And we were looking at and I've got a question I want to answer from someone who's in the room as well. We were looking at the trend lower in the Aussie yen, and I said, well, we just stay in until we have the change of the colors on the trend dots and the trend monitor, which we've actually had as well. But if we look at the time charts, and the reason for using multiple time frames is well, it's sort of self-evident really, and it makes the point that a lot of forex traders are come into this market, have one chart in one time frame, and there's all this other stuff that's swirling on around them in terms of sentiment, flows, price levels, and are totally oblivious to what is going on. But if you have multiple time frames, it tells you what is likely to happen. You know, what are you going to be facing up ahead? And the 15-minute, I have either the 3 or the 4. I've got the 10, and I have here the 15-minute. And we go back to this candle here where we had a trigger of the volatility candle, which David mentioned there. Now that of itself will tell you that you are likely to get a pause and possibly a reversal back in. And that is actually that, if you put those two candles together there, that is the reversal that we're seeing on the faster time frame. Now what's also happened as well is the volume point of control is a dynamic indicator. So this area here where you have it picks up the congestion. If you remember, it was up here, the price broke away and down to here. Now it's moved down and price is above it. So you could almost take that as saying, well, you know, we are seeing you know, this is going to give some confirm what we're seeing at the moment, that it is moving higher. Now there was a question that came in from someone who's actually got the books, the volume price analysis books that are on Amazon, which we wrote however many years ago, and there's no mention of, I think there's only mention of a couple of indicators. One is the CSI and the pivots, and I think we talk about the volume volume point of control. Why have we got indicators now? And it's a reasonable question. VPA is a foundation methodology, and it's a way of interpreting, of not just interpreting what you're seeing on a chart. It's almost like a belief system. It's, you've got the price action. How are you going to determine whether that price action is authentic or not, given what goes on in this market? So it is your foundation, but onto that you can add whatever you like. And in fact, VPA, there are 5 elements to it. Now I've actually got a little drawing here which explains it, and it's actually it's something we did a long time ago. Here it is. It's a little, here we are. If I show it to you, right, there we are. This really explains it better than I can. Right, this is your foundation methodology. This is what is covered in the books in great detail. So you've got support and resistance, patterns, candles, price, and volume. Once you get to grips with that, what you do with it after that, as I explained in my answer, if you're an Elliott wave trader, if you use Fibonacci, whatever is, you know, there are lots of, you use fractals, it doesn't matter. Whatever you use that you put on your chart is fine, as long as you have this at its heart, as it were. And what it actually does, it actually makes these other indicators, Bollinger Bands, moving averages, Fibonacci, stochastics, fractals, moving, as I said, you will understand when they will work and when they don't, because with volume price analysis, you will understand when you have a trend, when you don't have a trend. So when you apply the indicators, you will know whether the indicators are working. And we call them secondary indicators, not because they're second best, but because they are not proprietary. Now, why did we develop the proprietary indicators? And that is because when we came to Forex, the Forex market is unlike any other market. For a start, you're not trading a single entity. You're trading one country's economy against another, one currency against another. And to help us untangle what is happening, and to save us to having look at 28 different charts and multiple time frames, we started off with the currency strength indicator, because we established very early on that this is a market of flows, it's a market of levels, and it's a market of sentiment. And these have kind of developed as really as we have understood this market more and more. The indicators have an element of volume in them because they are supportive of the fundamental methodology. Do you have to use them? Absolutely not at all. If you are comfortable just using VPA, and we have proprietary traders, we have retail traders, we have traders in institutions who are simply happy to look at volume price, just use the methodology in its bare bones, if you like. This just makes our life an awful lot easier. Is there anything else you want to add to that? No, that's it. I hope that answers that question for you. Right, I'm going to pass back to David. I'm actually going to say bye-bye. And I'll leave David to wrap up. And do you have the details of the education program? It is actually all explained. By the way, just having said that, it is all explained in our, that's why we put the education program together. The education program includes the indicators, but what the education program also does is we've taken VPA, and that's another question we asked. Well, if I've got the books, do I need the program? And what have you done differently in one of the modules of the program? And what we've done is we've actually taken it to yet another level. It's really what we call a forensic look at volume price analysis. It looks at trends. It looks, as David said, what's a primary trend? How do you know this is a primary trend? Where is a secondary trend? It's a huge program, and David will outline that for you in more details, and it includes the indicators and shows you how to use them. But as I said, ultimately we do have traders who have simply taken the book, taken the principles of what is in the books, and have applied it and integrated into what they are already using. That could be secondary indicators, it could be another type of proprietary software. And what they have found is what the methodology does, it actually makes them better traders because they can understand what is happening, what is going on. And I'm looking at the Aussie yen on 3 minutes, and I'm looking at this price going up, and I'm looking at the volume coming off, and I'm thinking, that's really not looking terribly, something is not right. And what the other indicators tell me is it's come off the VPOC, so it's an attempt at a breakaway. Is it going to be a fake out? I've got my levels on there. Where is the money flowing into? Is it flowing into the Aussie, or is it actually flowing back into the yen? Because sentiment is not good. The market is great for trading, absolutely fantastic environment for trading, but not so fantastic if you are a short-term, medium-term investor, because you don't know if this is perhaps the big short. And we can see here the VPOC is dynamic, moving up and down. And the VPOC was also developed because markets spend 70% of their time in congestion. It's got principles of market profile in there, and this is the area where the market is in balance and it's waiting to go in one direction or another. So I hope that answers that question. A bit of a long-winded one. David, anything you want to say to that? Have you got the links up to the program and everything? Yeah, right. I'm going to pass back to David. We are back on Monday evening to look at a look ahead of what is happening next week on the market. So I'm going to wish you all a very happy trading day, a great weekend, and if you're in the UK, I hope it bloody well stops raining at some point. Take care, everyone.
Thanks, darling. Should be seeing my screen. Yep, that's up. Okay, just move the chat box out of the way. There we go. Okay, coming to a bit of a pause point on the CAD yen, as you can see. Same on the Aussie yen as well. Again, we've got a volatility trigger on 3. There we go. Several reasons why we expect this now to congest. We're at the volume point of control. We've got lots of volume here. We've got a volatility trigger, so we're expecting congestion to build, which is exactly what's happening. So if you're looking for this to go higher at the moment, it probably is not the case, and time to close out. If you've been in this one, got in the reversal, it's just not going very far. And that's all reflected. What's interesting is you can see this transition in the trend monitor. We've gone bright blue here for some while now, probably going to transition back now. This has gone into darker blue. If that came out the other side into bright blue, then the trend is going to continue, but it doesn't look like it at the moment because we're trading around the volume point of control there too. Over here, we've got a slight transition and nothing down here on 10-minute at the moment. So, decent amount of money to be made there. It's going to go into a bit of a pause point there. Lots of resistance overhead at this level. Platform of support in here. This is coming into play right now. So there we go. Just to wrap up, finally, this is the education program. It is called the Complete Forex Trading Program because that's exactly what it is. It's what we consider to be the gold standard. There's nothing else like it on the market as far as we're concerned, and certainly not at the price point anyway. It includes the full set of tools and indicators. There's a huge number. We start with these five core modules down here: the psychology, the fundamental, relational, technical, and the mechanics of trading. And then we go into this secondary set, which is VPA chart examples, how to use the indicators, pulling it all together, topic webinars, webinar library, and resources. It's a massive program. As I say, it includes all the tools and indicators, and we have a huge number of students on it. You're more than welcome to register for the program because it's win-win. We offer a 7-day refund on this program, believe it or believe it not. Today, we've had no one refund. Once you get into it, it will teach you all you need to know of how to trade Forex, from the fundamentals, all the relationship aspects, intermarket and also cross-market relationships, how to understand sentiment and flow, everything else, mechanics of trading, and teaching how to trade this market, and indeed any other, to be honest. And as Anna said, a forensic analysis of volume price analysis also. So you can find all the details over there at quantumtradingeducation.com. This is us in one of our trading rooms. We're actually in another one this morning. That's another one of ours. If you're interested in the tools themselves, they are at quantumtrading.com. We've got MT4, MT5, we've got NinjaTrader, we've got TradingView, and we're currently working on TradeStation, and that will be coming along in the next few weeks or so. There's lots of special deals there, or you can buy just one indicator. It doesn't matter what you buy. If you buy just one indicator or a whole bundle from us, you get 24/7 support. You get lifetime access. You don't pay us another penny. You get free upgrades on that. You get free upgrades if we have platform upgrades as well. You never pay anything else. You get full support 24/7, 365 days of the year. And if you invest in the full package, and this applies whether you just buy this or you buy it under the education program, then you get all the future indicators we develop for life. So you get free indicators for life as well. All the new ones coming along, you'll get them delivered into your dashboard free. Excuse me. So there we go. That's it. I'm losing my voice here. There we go. So as I say, you get all those indicators free of charge. We're looking at a whole raft of new indicators which are going to be developing for TradeStation, and we will then roll those out into the other platforms in due course as well, providing we have the coding potential within the platform themselves. Some of them do, some of them don't, but generally speaking, pretty good. There we go. I hope you've enjoyed it. We will be back on Monday evening, I think. We'll be on the US markets. I think it's, don't quote me, but I think it's 8:45 US in the evening, not in the morning. So thanks very much indeed for coming along. We do appreciate you taking time to spend it with us. Hope you've enjoyed it, and we will see you again soon. Enjoy the rest of the trading day, and bye for now.